Thomas, good to see you. Today, we're going to talk through whether you are taking on too much risk. We have 4 signs that you might be. Risk isn't just about numbers, it's about how you feel when market conditions change. So, let's talk through those 4 signs that you may be taking on more risk than you should. Sign number 1, you check your accounts constantly, but how often is too often?
Right. So if you're the type of individual, I have clients all across the spectrum. But if you're the type of individual that have to look at your account every single day, that might be an issue, right?
Mhm.
I'm a risk-based advisor, so I help my clients balance their risk over time. But if you're checking them every single day, maybe once a week, that might be a sign that you are maybe have some risk concerns.
Right. All right. Sign number 2, ask yourself, are you losing sleep when the market drops? That being said, though, Thomas, sometimes it's really hard to tune out the headlines.
Right. So when you're constantly watching, CNBC and you're getting stressed out because, Kramer came out and said that the market's it's down 800 points or whatever, or down 1.5%, and you're stressed out about your portfolio. That's another indication that perhaps you may be concerned about. You need to think about your risk.
Mm.
Mhm.
All right. Now, sign number 3,
Mhm.
you've made panic driven decisions before. We've talked about this, Thomas. This is known as emotional investing, how we tend to make the exact wrong decision at the wrong time.
Right. A lot of times I'm also contrarian. So when the herd is there and they're buying, you may want to probably think about the opposite. And especially, if you're emotionally driven when you're buying when the market is high and you're feeling good about that, and then and you're looking at the market when it starts to drop and you want to stay. It's important to kind of take a look at your risk as well.
hmm And then number 4 is kind of related to that. You feel pressure to chase those returns, aka FOMO.
Right. Again, risk based and also contrarian. By the time you're probably hearing that there's a hot stock, and that's not all the time, but by the time you probably hear about it, it's probably a little too late. So you might want to be thinking the opposite direction.
So, Thomas, I think that this all begs the question, how can working with a financial advisor help us stay in line with our risk tolerance?
I think it's vital. The reason being is because things change. Life, you go through cycles in life. Being able to build a plan that has volatility controls in it, based on where your risk tolerance is at one point, and then kind of revisiting it every couple of years and seeing where you're at and what your appetite might look like, especially later in life as you get closer to retirement. By
Right.
working with an advisor, we can kind of reassess that.
Yeah, definitely a moving target. Well, if somebody would like to sit down with you, determine if they are taking on too much risk, if they feel a little bit too stressed out when they're listening to the financial headlines, what's the best way to reach you?
Definitely. You can go to my website, martinheritagegroup.llc.com. You can shoot me an email at info@martinheritagegroup.llc.com. You can also give me a call, 651-503-6064. And then I'm on all social media platforms at Martin Heritage Group.
Great. Thomas, thank you.
Thank you.